What's going on, everybody? Welcome to Future Money Show's market update. I'm here to talk about how the stock market is going to the moon. That's why I'm sitting here in space. Nah, I'm just kidding. We actually got a lot of bearish news to talk about today. We're not going to the moon. But before we get into that, make sure you hit the subscribe button up here, smash the like button so we can get that YouTube algorithm working for us. Let's hop right into it. Let's see what the market's telling us. Now, before we hop into any charts, there's a lot of news going on with the Fed, and I thought we should get that out of the way before we hop into it and get some background. There's a lot of fear in the market right now. And as you guys probably know, inflation came out to 7% recently, which was up from 6.8. Now, the Fed's reaction to that was they're going to increase rates at a minimum of 3 times next year. Now, Jerome Powell has come out and said that he may even increase it more. We were supposed to hear from them about these interest rate hikes on March 16th. On March 16th, we were supposed to hear, whether they were going to do a rate increase. It was expected that they would be doing one on March 16th, but it's expected that in a few days on January 25th, Jerome Powell might actually be coming out with a surprise rate hike, which could affect the markets. And that's what we're seeing and reflect in the market right now. We're seeing stocks making 52-week lows. You're seeing cryptos making 52-week lows as well. Some are 80% retraced. Some stocks are 30% retraced, 40% retraced. So there's a lot of fear right now. Now, I'm not recommending you guys go buy, but this is something to keep in mind because until we get these news about these rate hikes, we may just see more pain in the market, more bloody markets. So I would be wary of anyone trying to get in right now, simply because we don't know what's about to happen with these rate hikes, and the market reacts off of fear, and there's a lot of that right now. So let's look at the fear and greed index. Okay, so right here we have the stock market fear and greed index. Now, as you can see, we're somewhat near the middle. We're relatively fearful, but not near the extreme fear level. As you can see, a week ago, we were in the greed section. We were in the green. Month ago fear, year ago greed. So we've been relatively in the greed section the past year or two. So that's why you've been seeing the stock market, rip. But if we look at the crypto fear and greed index, as you can see here, the crypto fear and greed index is almost at its max. We are at extreme fear now. Yesterday, last week, last month, we were very fearful as well. So we're almost at a max fear right here. And the crypto markets are bleeding at the moment. So these fear and greed indexes can give you a better understanding of where you're at in the market and whether you should be looking to buy, sell, just getting better ideas for the trends. With that being said, let's start looking at some individual stocks that have really tanked that I've been looking at, and some cryptos as well. This is not financial advice. I'm not saying that you should be investing in any of these companies, but what I am saying is that these have had significant changes in price, and it's just something that's been on my radar. All right, so first we have Microsoft here. Microsoft is about 15% down in the last 80 days or so. Definitely been on a tear. This is an amazing company. Doesn't have many pullbacks. Great future, great profit. So yeah, this is something I'm looking at. Microsoft's down. Tattooed Chef is just getting obliterated at 1261. 1261 obliterated. Almost at IPO price. You got Tesla down at 943, down from a high of $1,250. Disney, amazing company, has been tanking. It's almost at about its point where it was at when we saw the coronavirus pandemic in March 2020, where it crashed. It's about at that point. Now, Disney hasn't been at this price for years, so it's something to look at. Nvidia, a company that in the past few years has grown tenfold, is down massive. Tech stocks are getting destroyed. We're down over 30% on Nvidia, and this is one of the best tech stocks of our generation at this point, so something to look at. Square, same thing, another great company, absolutely obliterated. Look at this chart. Down almost 60% from its high. This isn't cryptos, this is stocks, almost down 60%. It's testing its previous high. I would say it's, until we get these rate hikes, until we get this Jerome Powell to make up his mind, we are not going to see these stocks make up a decision. We have a lot of convictionless pushes right now. So as you can see, we still got room to go just to test the last high. So in the stock market, dollar cost average in, we are in buy zones for a lot of these stocks, but we could see a lot more pain in the market. So be very, very wary. Palantir, destroyed. All right, let's look at some crypto prices and what's going on in that market, because I know you guys love that. Now we have Bitcoin here. We have the Bitcoin chart. We are at a price of around 35,000. Now, a lot of people didn't think we could get this low. We thought we were going to rip forever, but that is not the case. Now we are down we're down around 50% from Bitcoin's high. Now, Bitcoin is subject to a 50 to 80% attack. Now, we're only at 50%, so we're at the minimum of that retracement. We could see another 30% retrace down to around $20,000. That might not happen. I don't know, but it's something to be wary of. We may not be at the end of this bleeding market. Ethereum is at a price of around $2,424. Now, we absolutely are subject to more bleeding. We're also at a 51 retracement. We see support around the 1800, 1700 mark. It could drop down all the way down to that support level, just like Bitcoin has some more room to fall. But these are all, if you're invested in these things long term, if you're believing in the tech or the utility of these assets, then you need to get in at a price you feel comfortable and hold, because you're not going to be able to time the market, so you can dollar cost yourself in. So, we're at prices where I could see it being reasonable to get in, but you should not lock yourself in a position at this price with all your money. You should be dollar cost averaging your way in, because we don't know where this bottom's going to be. Like I'm saying, we could see 20, 30% more of a drop from where it is. So dollar cost averaging is something that's very important. Cardano is one of the only coins that's actually been holding support really well. As you can see, price has bounced off these levels many times before in the past year or two. So we're right around this very important level. Now, if it breaks these supports, it has room to drop as well. But like I said, dollar cost yourself in. Some of the projects that I really like that I believe in long term, that are utility-based assets, are almost 80% retraced. XLM is one of them, Stellar. We're down, we're at a price right now in the $19 range, and we're down around 80%, 78.5% from our high. Great price to get in. It's rallied this year. Same thing with XRP. XRP's chart looks very similar to this one. Quant, another one, down major down. We're down 80%. Now, with these attacks being 50 to 80%, we're at the 80. We're near the max. We are near the bottom, although we don't know where it is. Now, the crypto market and the stock market, they are very related in the sense that they move together. You have institutions buying and selling and manipulating these markets, and they are all afraid of these rate hikes right now. Now, something I wanted to talk about with the stock market is that earnings season is coming out. Now, we had great Q4 earnings. What does that mean for us? Stock market has been trading sideways and down since Q4. And the stock market does not trade off of Q4 earnings. And institutions do not trade off of Q4 earnings. They trade off of Q1 guidance and direction. Now, what I mean by that is, think about it. If Q4 earnings were great, which they were, and we come around to Q1, and now Q1 earnings are great, that's going to incentivize the Fed increase rates, because they're saying, oh, all these companies are doing great. Look at their revenues. They're just going up. Even in the face of Omicron, companies are doing good. We can raise the interest rate and slow things down a little bit, and we're going to be okay. And that's bad. That's going to make stocks drop. Institutions do not like that. Now, let's say Q1 earnings come back bad. That's just bad in general, right? The stocks are going to drop, and the Fed is going to struggle to figure out what to do at that point. Should they increase rates? They'll probably lower the amount they increase it, lower the amount of times they increase rates. I'm going to end with this to give people a better analogy of the Fed. And I'm not going to take credit for this analogy, because I heard it from Meet Kevin. He's a great YouTuber. Imagine this big beam. Imagine there's a big beam, and on top of it, there's a big wooden plank. And on that plank, it's kind of wobbling back and forth. It's got two weights on both sides, and it's wobbling. All right. And the Fed is the one trying to sit there and balance so it doesn't fall. And all of us are standing at the bottom underneath this thing, not wanting to get hit. And the Fed is sitting there trying to make sure we don't get hurt. If it falls, then, we all get hurt in the stock market, in our portfolios. All right. Now, on one side, there's hyperinflation, which is, if we have too much growth, prices grow too fast. And that's what we're seeing now. We're seeing very high inflation, right? And if that happens, that's very harmful. Now, on the other side, you have hyperdeflation. And what that means is, if the Fed start to slow the market too much and they increase rates over and over and over again, and the market slows so much that now we go into a recession. That should give you a better picture of what the Fed's trying to do here. And we're going to get those news in the next few days. If we don't get hit with that surprise rate hike from Jerome Powell in 2 days on January 25th, then we're going to see it, probably in March or the coming months. So keep an eye out for that. I hope you guys like this video. Let me know if you guys have any suggestions on what you guys want me to cover. This was a first for me, so I'm not sure what you guys are interested in learning about or what you want me to cover in the market, what you guys are interested in. So let me know in the comments. Make sure you go listen to all of our Future Money Show podcasts. Those are great. This is a new little series we're going to be doing. Make sure you subscribe, and I'll see you guys next time. Thanks for watching.